This is the Stock Trading Reality Podcast, episode 66.
I opened up an account, like $1,000. Blew it immediately.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. He sucks at golf, but loves to at least try. Clay Trader.
Yes, I do enjoy the game of golf. I don't know if I necessarily love it, but I like to go out there and do it. The driving range is great. And once in a while, IT Nate, who is the producer of the show, will invite me along with some of his buddies. But I think that's more of a sympathy thing than anything else. And they once compared me to Happy Gilmore out there because I think I was in these shoes that were like their sole was falling off the bottom, and I'm out in like basketball shorts, and it was probably not a pretty sight. But anyways, I do like it. I'm not very good at it. I don't like to, but I have the slice and the hook. That happens a lot. I don't really hit it straight, which is weird because I played baseball in high school and all that sort of stuff. But it's just not quite the same technique. If you're swinging a golf club like a baseball bat, it's not like going from paper trading to real money. It's just not a smooth transition. So, Ches, you liked that analogy, didn't you? Ches, by the way, is our esteemed co-host.
Yes, I do. I do like that. And I was going to say, if you want to be like Happy Gilmore, we could get you a golf club that's shaped like a hockey stick. But I guess we'll have to get one that's shaped like a baseball bat for you to
that says
help aid
Louisville
you.
Slugger on it. Yeah. Are you a fan of golf, Ches, at all? Are you any good at it?
I have a feeling that I'm going to slowly get more involved in it because, I'm getting married in about a month now, and Kelly's entire family, they all play golf, and, her dad plays it, much more seriously, but her mom and Kelly, and they go, and they're kind of like you. They just have fun going out there and slicing it and hooking it. It doesn't matter. They're just having a good time. But I have a feeling that I'm going to end up getting more involved in it. But no, I haven't golfed since I was in like high school. So yeah, it's been a long time.
Well, I don't go out there to have fun. I go out there to win. The problem is I'm not very good at it. So the whole winning part kind of drives me nuts. So I'm stomping around out there like a madman. But, oh well. IT Nate, our producer, I can see him on webcam. He's got the biggest smug look on his face right now because he knows how bad I am. So anyways, let's just move on to our guest today, who is Ches. We got a Canadian on the show, our second ever Canadian. This is great, isn't it?
It is great. While we have a Canadian takeover in the chat room most of the time, we have not allowed the Canadians to take over the podcast. But we are easing them into it. But yes, we do have another Canadian today. That's great.
True. Sometimes I look in the lounge and it's just like Canada. It's like, where are all the Americans at? But yeah, and yet we barely ever have them on here. But yes, Andre is from Montreal, Canada. And I talk about it. I apologize to him. But we made some conclusions about him that were not even close to being right. But he was totally cool about it. But Andre has been a member for a long time, and I think he said 2014-ish. So, yeah, he's been around a while, and he's got a lot of good little kind of tidbits, what he's been through, and just some good advice that, he would wish he could give himself. But there's definitely some things here that if you're newer or even have some experience under your belt, I'm sure you can kind of garner some nuggets of wisdom. So let's just hop right in and talk with our Canadian friend. Well, hey, Andre, welcome to the show.
Nice to finally be here.
Now, we have to give a little disclosure here just because it's funny, but I feel kind of bad. So I feel like we should all apologize as a whole. But while we were getting things set up, we saw his name, his last name, and IT Nate, who's the producer of the show, goes, oh, yeah, that's definitely a French name. Because, Andre, you are from Montreal, which is, the French part of Canada. So here, right. Ches, myself, and IT Nate are, he's probably wearing, a beret, and, we're making all these terrible, stereotypical conclusions about Andre, and all in good fun, of course. And then, Andre, are you French?
No, I'm not. No, I'm not. I'm Greek, actually.
So that just showed, we got off to a great start with Andre when we're, telling him how you're French, and we're making all these French jokes. And I'm actually Greek. So, but he was cool about it. So I guess on that note, our apologies, and thank you for just rolling with the punches on that one. So,
hey, no problem.
And also, we mentioned this too, but you are the second Canadian that's been on the show, and we are up into the 60s now in terms of shows. The very first guest we had, second, because Ches was our first guest, was Hooch, and he's in Canada. So it's been a long time since Canada has invaded the podcast, but Andre is here on his dog sled, wearing his beret. And
he's a little old.
Yeah. So, but yeah. So thank you very much for I guess making the second for representing Canada. So, Jez, I'm pretty excited. You excited for this one?
I am excited. I'm more excited about those stereotypes you just listed off right now. It's just, I think we need to have more Canadians on to set it straight for Clay here before we assume everybody's on a dog sled trading from, an igloo somewhere.
Yeah, exactly. And Andre, he wanted to take a little pause first because he had to go refill his coffee cup with maple syrup, but I think he's good there now. So are your dogs for the dog sled? Are they all fed? Are they ready to go? We're not going to hear any barking in the background, are we?
One will eat the other, so we're good.
Oh, excellent. So, all right. Well, we better get to it instead of we probably just alienated many different cultures, but it's all in good fun. So, Andre, you've said you've listened to many, so you kind of know what's coming your way. How did you hear about the markets? Kind of what got you interested, and then what actually happened that kind of pushed you over the ledge in the sense of, you know what, I want to actually give this a go.
Like about 7 or 8 years ago, there was a contest here in Montreal on like a Gazette Wall Street challenge type thing. And my brother-in-law had always been, fooling around with the stock markets and stuff like that. Never successfully. But he mentioned it to me. I said, let me give it a shot. I mean, I was looking for something different to, it was a challenge. It was a game, whatever. Let me get into it. Of course, I failed miserably. But it did, open my eyes a bit. Like, at the same time, I have a friend of mine who is actually my son's godfather, who opened a trading firm around the same time, and he's actually done pretty well. He's opened a lot of offices and whatnot. So it's always been in the background somewhat, and I always I always look at something that I could do in my spare time, or even when I retire and stuff like that, or even full time. When what I mean? It's like it's great to do a full-time gig and doing that, retirement, a couple hours a day. I don't see myself stopping ever. So, it was something that appealed to me. It wasn't, so I just had to understand it a little bit more.
So you had the competition. You said you did pretty poorly at it. Did this open your eyes in any way, shape, or form by at least doing that? Because first off, I want to commend you for doing that before you just opened up a $100,000 account and threw all your money at it and then said, oh, well, shoot, I'm actually not that good at it yet. Did it open your eyes into kind of what you need to do next?
Most definitely. I mean, it didn't it opened my eyes. This is many years ago. I don't remember the exact feeling I had at that time. I knew I was onto something, or it looked interesting. I never had that mentality of, okay, let me take the kids' college fund or whatever and put it on the market and let me see how it goes. Let it roll, black baby, whatever. I have friends that did that. Actually, one person particularly did that, and oh my God, so I looked at him in one way and, okay, this guy really takes risks, but that wasn't going to happen with me. I never went that route. When that challenge was over, I said, I think I could do this. And, it was like a couple of months, 6, 7 months, whatever. I was still fooling around with it. Always had live charts going. So I was always paying $80, $100 a month to get live data. And I always had it in the background, even if I wasn't using it. So kind of was a waste of money, but not really in the long term. And then I opened up an account, like $1,000, blew it immediately. Like
all right,
penny stocks.
All right. Oh, okay. We gotta.
Yeah.
Let me quickly, because so you did terrible in this competition, right? I understood that, right?
I didn't do well.
But then you also you comment, but I think I thought I could do it, or I knew I could do it. So how did you do so bad in the competition, but then also think you could still do it? To me, that seems like right. It seems like a contradiction. So what exactly? Go a little bit more into that, because I find that kind of fascinating.
I've never failed at anything, really. I've never stepped back of anything. If I failed at it, I took a step back and I'll look it over again. I didn't immediately open up an account right after the stock market challenge. It was it was maybe a month long, this thing, but I did this. Maybe I opened up an account. I started looking at charts and I started looking at patterns. I was looking at, crossovers, things like that. I noticed there was very few things I was looking at. And I said, I could do this. And I was looking look what happens when that happens. And look and I'm doing, do the math, okay, 100 shares, 200 shares, whatever. This is what it'll come out to. So I go, I could do this. I just need to study it a bit more. So,
so the
you know what I mean?
competition was more of the introduction. And
Yes, absolutely.
although you did really, really bad, you're like, okay, I did really, really bad because I really have no idea what I was doing, but I do like the general concept here, and I think I can figure out the general concept. Is that kind of a fair?
Absolutely.
Okay,
Absolutely.
cool.
Yeah.
So now let's jump back forward to where you were. So you did some research, and then who was your first broker with? Who did you open up that first account with?
Scotiabank.
Okay. I forgot we have a Canadian. I've never heard of Scotiabank. Anyway, so but Scotiabank, that sounds like a regional bank or something where. Do you remember what the commissions were on that? That doesn't sound like a very commission-friendly.
Horrible.
Okay, because then you said penny stocks where you can buy lots of shares. So now I'm thinking, I really hope that it's not a per share type. Anyways, I'll let you go. So you opened up this $1,000 account. How did you even come across penny stocks?
Well, I think at that point I had, searches on the internet, chat sites, so I came across, let's say, like stock twits, things like that. And so like, chit chat, like listening to what other people are talking about. This is like, we're going back like 6 years ago by now, where it was, where they throw out a name or whatever. Then I started looking at, I don't know, I just came across some penny stocks and I just said, okay, let me just throw one in. It was one of those things. And it's like going back 6 years, I wish I could remember in detail. I jumped in. I still own that stock. EFIR, E-F-I-R. It was $400. It's worth 6 cents. Total.
So you know what I find really funny though about this, and I'm not laughing at you by any means. It's how traders progress. You talked about your buddy who was, he really takes risks. He's really risk on. Yeah. And then here you are talking to me about, so I dive into penny stocks, and to me, just personally, I just know that the way they move is extremely risky generally just because of the nature of penny stocks. So you kind of find, obviously these word of mouth type things, forums, just stock twits, just people talking in general. Are you watching like CNBC on the TV and stuff like that as well?
I probably was. Mad Money. That's where it was, especially, anyway, like you look at it and they go, you just hope they mention your stock or whatever. And if you're long, you hope they mention it.
And then everybody cheers in the forum. Woo! Kramer talked about it. We're going to the moon.
Right. Yeah. Let's go to the moon. Right. Back up the truck, whatever.
Yeah. So was this in the $1,000 account that you had kind of just went into stocks with?
Yeah. I only started with $1,000. And I didn't think it was it's $1,000 to, I didn't really think it was that much. I bought penny stocks where I guess everybody does the same thing. From the podcast, what I've been hearing, a lot of people go jump in right away. But in comparison, like with the risky, I mean, this guy we're talking about, my brother-in-law, the guy on a tip was told, buy this stock. He called his broker. He didn't have the money. It was all margined or whatever. It was $30K. The next morning, he tells me, I'm at the bank arranging payments. For 5 years, the guy was paying like $500 debt overnight. So I wish I could remember the name. But that's what I mean. Like he took risks, But
that's straight up gambling there. I mean, that's crazy. So I guess the lesson there was, who cares about what the ticker is? Don't go and just, take a tip and take margin and then put it all on black. That's pretty much what he did there.
That's it. Yeah, he assumed that it'll immediately. Okay, the tip was good and it'll go up. And he'll profit immediately. But whatever.
Yeah, stuff like that's scary. It's scary to think that people go and do that. But I mean, this is not the first time we've heard of that, and it won't be the last. But greed is a fascinating creature.
That is 100%. Look, a lot of things were going on. He owned 2 restaurants actually, and both like chain restaurants, and he had 2 of them, and they both weren't doing well. So then I guess he goes, somebody just gave me a tip. Oh, you know what? Do it. And he jumped in on it, and it failed too. Didn't do any research. He's very gutsy, this guy, but he just doesn't. Let's hope this isn't on the tape. But anyway, he just doesn't. He wants to do it fast. He just tell me what I'm going to make, and that's it. One of those type of.
Yeah.
I don't want to know I don't want to know the rest is all filler. Just tell me what
Yeah.
you
No,
think.
I think you've said plenty enough where everybody can connect the dots.
Yeah.
People can understand the psychology that guy was kind of working with. So you take this $1,000 and you said
Yeah.
that one position started as $400 and is now worth literally 6 cents.
Six
So,
cents.
so that one
And it
didn't.
even, I think it's split even. I don't remember. It was like,
Yeah,
anyway.
I'm sure it's split multiple times.
Oh yeah. I
Over
haven't paid
this.
attention to it.
So
Uh,
why do you have it? Just do you use that to kind of serve as a reminder, or what's
no,
the?
actually, it'll cost more to cancel the trade. So I just didn't bother. you know, so I said, you
Yeah.
know what? Leave it.
It's a
Crazier things
shiny
have happened.
badge of honor. Yes, when
That's
it
right.
costs more to close your trade in commissions than the actual account value is worth for that, or that particular trade is worth. Yep,
Yeah.
that's a badge of honor right
Yeah,
there.
that's market tuition 101 right
Yep.
there. I
Right.
mean, the
Yeah.
ultimate reminder of, yeah, there's a little bit more to it than whatever, your planning was going into that trade. So actually,
Yeah.
on that note, what was your planning? What was your quote unquote strategy for these first couple of stocks that you were doing with this $1,000 account? Was it literally
Oh,
just searching social media and buying based off other people, or what exactly? Because in your mind, you justified it somehow. So what means were
I
you justifying this?
I was thinking it more like it could be like an investment. It could double. It could, anything. I was obviously it was the beginning, so it wasn't. I didn't really fully understand the market. Uh, I understand it a lot better today, but I was nowhere near what I was then. Uh, so it was like, was it gonna retire on that one stock? I don't know. I mean, I assumed it. I hoped it was going to get, climb and just keep climbing, but it didn't. It just that I bought at the top and I just kept it, and I think pretty fast. It was. I remember like how long I actually kept it before it tanked, but yeah, I think it tanked for a long. This was actually in 2010. I bought this stock. Wait, 2009, 2010. I remember that.
I
I
wanna I
remember. I
wanna
think.
point out to our listeners though, before I even let you go any further, that Clay has the biggest grin, and so do I. And the reason why we have that is because when we asked you, what your plan was at first, it's not because of anything specifically you said. It's that your plan was open ended. It was like, maybe I'll be an investor. If this works really well, I'll
Yeah.
just
He
keep
used
hanging
he
on
used
to
the
it.
word could like 15 times. Well,
Could.
it
Right.
could be an
You know, it's
investment.
like,
It could double. It could.
It's just the most open-ended plan. It's just
yeah.
you don't get me wrong. It's
No.
especially when you start trading, it's exciting. You get in there, you're like,
Yeah.
"Woo, I'm ready to do this." And then you're just like, "Well, now I'm visioning, I could be holding this. What could it be in 15 years? What great
Yeah.
products
Yeah. Yeah.
is,
Yeah.
Warren Buffett going to get into it?" And all this
Yeah.
stuff. But yeah, it's very, very
Rumor
open-ended.
has. Yeah.
Yeah,
Yeah,
I wanted the listeners to understand that we're both grinning over here because of how
Right.
open-ended it was, but
yeah,
that's not uncommon by any means. Yeah.
No. Yeah. I don't think because I mean nobody really. Well, everybody when we think of the stock market, you think, easy money or whatever. You would assume you go, okay, maybe I have it. Well, you know what I mean? It's like here's look at all the cash, that you can make. No, of course I got into it with that in mind, but I'm not that greedy, so I'm not that. I don't expect to. Now especially, I don't expect to. Like it's I don't. I
so
don't
you don't think
expect
you're going to go Lamborghini
$1,000.
shopping this weekend? That's
No,
not your
no,
plans right now.
no,
Okay.
no. Like no. But yeah,
Well, I
I
guess
mean,
for
it's
you it
like
would be dog sled shopping this weekend, like
yeah,
get the Lamborghini version of a dog. So yeah, but so and just to kind of circle back there, and for you new listeners out there, if your trade plan has more than three coulds, you got a problem because there's three coulds a part of a trade plan. The price could go up, the price could go down, and the price could go sideways. And
I
that's
also
all you need to be able to build a trade plan around that's got risk and all that stuff built into it. Now you may be saying, oh, well, I have no idea how to do that. Well, take that as a sign that you're probably not quite ready to go with real money. But if you find yourself with, like Ches said, open-ended, and it could do this,
Right.
it could do that, it could do that, and you're on like could number 17, that's no plan at all. The only trade plan there is I have no plan. So yeah, I like how you totally just said that, because that was kind of funny how you just
funny how you pinpointed it right away. No plan,
yeah.
because that's
So
just reality.
well, I had an idea. I'm like, all right, this sounds like, well, I mean, you're nothing like, you're not some new discovery. A lot of people have gone down this path, and I mean, I myself, my plan was to get rich on stainless steel mufflers, so it really doesn't get any stupider than that.
Yeah.
But so you are, you have no plan. At what point do you kind of just tap the brakes a little bit and say, wait a second, Andre, what are you doing? I don't know what I'm doing. Did it take a kind of a stock that broke your heart to make you realize that, or where did kind of all that come from?
Not right away, because like back to like Scotia iTrade, the commissions were crazy. I had a little bit of success, not a little. Like I remember on one trade I was up $140, and I was doing everything wrong really. My commissions were like $20 a trade or something like that. And then then there was conversion fees, because I completely didn't realize I'm buying a U.S. stock with Canadian currency, so I was getting dinged like both ways, another 7%. It was like in the end, I think it was like the $140 ended up being like, I don't know, $30 or $40. I said, this is crazy. I immediately closed that account. Well, I mean, I think it was, I think I pulled whatever was in that account. I pulled it out and went to Quest Trade, where I put more money into it. Let me put 10 grand in, and let me go with this. So I bought like a few stocks. Again, I don't remember the exact time frames, but I was buying stocks. I bought Yahoo at $12, and I sold it. I had to go somewhere, and I didn't want to leave it open, because everything, of course, was going to zero. That's how much I understood the market. Here I'm buying Yahoo. It's a $12 stock. It starts going against me. I had no stops. Going, well, it can't. How low is it going to go? And this is all because of previous stocks that I had bought and really were kind of shaky. So I was getting into stocks, and I was like a bit shaky. I would jump in, and my nerves would take over. My gut would tighten up. I would start sweating. Like it was like I felt better not being in the trade.
He's sitting in the dentist chair.
Yeah, exactly. So why am I doing this? Because it's like, I don't know. I just said, okay, this is a learning curve and whatnot. I mean, I bought 1,000 shares of Yahoo. I sold it the same day for $11. I bought it at 12. I sold it for $11. So you know what? It's okay. $1,000, brush it off, move on to the next thing. And this isn't like one after the other, but there's just different times. I bought Alu, and of course, I bought it, I think, at 260 or 220. Again, 1,000 shares or 3,000 shares or something like that, and or 1,000 shares. And then I remember it started going down, so I put more in to lower my I don't know, whatever.
Come on, Andre. You say the word. You can cuss. You average down. I like you trying to wiggle around, admitting that you average out. Right. I put some more in. Put some more in. That's a new one, Ches. He put some more in to lower his cost basis. Clever. Very clever.
I put a little bit. I put $1,000, more like $3,000 or whatever. You know what I mean? When somebody says it's, I only put a little bit. Oh, he maxed out. So I averaged down, and I ended up selling for like $1 or something like that. You there?
We're here.
Yeah.
Somebody else calling me, but that's okay. Yeah. So I think I lost like $3,000 total on that thing, Alu, and then it went up to what the heck did it go up to? Like $15 or something, or $14 or whatever. I don't remember, or $6. I remember something like that. Then my final one was Micron Technologies, MU. This was a 3-day loss of $1,750. I bought 1,000 shares. I bought it at $675. 3 days later, I'm looking at it. It doesn't want to give in, and it's going. And I was kind of looking at the chart at the same time, and I called my son's godfather, a friend of mine. I said, "Look, you know about charts and stuff like that. Is this thing going to $2?" And he looks at it. He goes, "Oh, for sure, it's going to $2." So I looked at it. I said, "You know what? Let me just take my lumps again, $1,700, 3 days gone, and I'll and leave it at that." Micron Technology, I think, hit like is that the one that hit $15 or something like that? I know Yahoo didn't take too long to go to like 40.
Yeah, Yahoo went to 40s within a couple months of when you were in it. I was looking at the charts actually while you were talking about that.
Yeah, that's crazy. It was just like a lot of like poor judgment on entries, scared, like taking other advice. All my fault, 100% my fault.
Right. But I do want
pulled the
I do want to
trigger.
bring up some good things though. So while, granted these are losses and, depending on what your overall account size is, these can be pretty hurtful. The thing is
Right,
though, and I know you said you're kind of gripped by fear and you'd almost feel uncomfortable. The thing
right.
is though, is that you didn't say, this was a 3,000 day loss. The only one you're still in is that penny stock that's, there's no point in even taking it out. But you actually
Yeah,
would close these trades. You'd say,
right.
I would rather just get out, probably, and no, and I'm sure, I'm not a psychologist, but I bet you would want to get out to feel better and rather try again and have kind of either better initial success or something else. But you at least would take your lumps and you didn't, turn that $3,000 loss into a $30,000 loss. So you're exhibiting some risk management without even knowing it. Don't get me wrong; you're probably selling in the complete worst spot to sell, but that's just human emotion. I think we covered that in the last podcast too. That's just kind of a cycle traders go through. They buy the top, they sell the bottom, and how many times you got to do that until you learn? So at least you're taking it off relatively quick. For whatever reason that is. You're at least kind of doing that and not, it didn't sound like you averaged down, put the whole house on it. So I want to at least commend you for that. Clay, you look like you have something to say here.
Oh, I'm just, you made a comment. What did you say? Oh, I just, my entry points are wrong. That's what was, well, I mean, what was wrong is you had no idea what,
wrong.
yeah, everything was wrong. Exactly. You had no idea what was going on. That's what was wrong. It had nothing to do with your entry points. I mean, but to attest, and I was thinking about what Ches said, you actually started off really good in the risk management department with that first account. You only put in $1,000. So I was going to eventually commend you for that. But then you come and said you open up this next one, you put in $10,000. So you increased that by what, like 900%. So, and then again, I don't know, who knows if you're worth like $10 million, then okay, $10,000, that's still, that's nothing. But from going from $1,000 an account to then your next account at 10,000, when you still have no idea what you're doing, and as you just admitted, everything was wrong. I guess the moral of the lesson here for listeners out there is, just start small. Start small. Yeah. It's not as easy as it appears, and whatever you want to start with, I'd say like axe that by at least 50%, if not more, and then you can if you want to test the waters there, because I realize a lot of people these people trying to sell courses, they don't know anything, and that's fine, but just at least start small. And we talked about it, I think, that in the last podcast too, but just start small. Andre, would you agree that's a pretty, that's a good piece of advice?
Yeah, most definitely. I mean, it's not, I never paper traded, well, aside of the stock market challenge, but I mean, I should have just, but I didn't have the tools in front of me. Like right now I use, what's that one? I have it on my desktop. I don't even remember what it's called. It's a paper trading thing, and it's live, and it's I place my stop, it triggers it. I place my buy, it triggers it. The simulator one, what's it called? Let me just get to it. Think or Swim.
Oh yeah, okay. TOS.
Yeah, I'm using that one. Look, at least it gives me my. It doesn't work well in the morning. Like as soon as the market opens, I've noticed like it won't trigger if I do jump in or whatnot. So I have to wait a bit. So I take with whatever if I do trade during the daytime. So I wish I had this then, because that's all I would have been doing. Because I'm not the like I put in the 10 grand, and like I put in the 10 grand. I bought, sold, whatever. I still lost money. I made some money. Overall I was down. That was for sure. I had no clue what I was doing. Thinking I could do it. But, at the same time, it's like, well, how do I know if I don't trade? Or how do,
which is a very good point. I mean, that's why, if you are going to do it, start small, because at the end of the day, can I really do it? Well, you gotta, you gotta jump in the market at some point.
Yeah.
But,
Exactly.
Still start small. So you pretty much sounds like selling the bottoms, buying the tops of these things. At what point did you say, okay, I didn't have it figured out with that $1,000 account. I now have this $10,000 account with a new broker. Yeah. I still don't have it figured out. So, what was the trade, or what, just kind of what was the circumstances around finally admitting that to yourself? And then what was your next step after that?
Well, I think at that point I was seeing different patterns. I was seeing different things like, the Bollinger, the crossovers, things like that. What I used to do is I used to I used to wait for the last 10 minutes because it was that's when the traders are either going to stay in or if it's going higher or whatnot, like if they'll stay in or they sell off. So if there wasn't any major sell off, I would see that as another indicator to stay in. And to be honest with you, that worked pretty well. It worked great because I'd buy some pharmaceutical companies. Those were always my money makers, the pharmaceutical companies, but extremely risky. And I never stayed in too long. Like I would buy, let's say if I would buy 1,000 shares, they were like $3-4, So considering what I had lost in chance, exact that word in the past, I didn't see it as that huge of a risk. I still could sleep at night. I saw some indicators. It was every hour. I would set up my hour chart. Every hour, if it would continue to go up on price action and volume, it looked like steps. Okay, every hour. Then it was a very good possibility for a pop in the morning, and I was very good at that. I would give it all back during the daytime. I would capitalize up, like $200, $300, even $1,000 on the morning pop, and then just like it was nothing. I just started I would trade daytime and I would give it back. So, that's pretty much why I thought I had some kind of strategy, but I knew I couldn't keep it. I was giving back everything, so it was pointless. I wanted to do that. Yeah, I could have just stayed trading, just the buying at the end of the day and then selling on the market open, and then just do that. But I wanted to learn more. I wanted to get more into it. So
But I mean, then you would just be. I mean, you wouldn't even be. You'd be a lazy trader then. I mean, as traders, right, Clay? Don't we have to be in the market at every single moment in time?
The market's open 6.5 hours, so you should be making trades all 6.5 hours. I mean, that's what day trading is. I mean, every single second of the day.
Yeah. Well, depends. You're right. Well, you don't have. I don't know if you're serious, but
that's my bad joke there. So
yeah.
But yeah, no, that's this brings up a question. This was not it was a strategy problem, but it was not an entry points problem. Your entry points were clearly doing very well because you did, fine entering into the trade. It was more of a trade management problem if you started to give everything back. So why don't you maybe hop back into that? Because it sounds like it was doing pretty well.
It was, but I mean, I just I haven't done that in a while. Because since CTU, I've been trading more in the daytime. Granted, right now, paper trading, just because, time, I don't have it. I do and I don't, but I don't want to risk any real money. I like to catch it in the daytime. I want to be in full control of it. I want to be able to get out right away. If it turns against me, I get stopped out. I'm out, done. The morning pop could be $200, but I can do that during the daytime. You know what I mean? It's like but I'm in more control in the daytime than I am. Market close. I'm in Canada, so at 4:00 markets are done. So I would literally I would get in, I would buy something, and I would start as soon as I buy it, the market's closed. I feel good. There's nothing I could do about it now. I'm stuck in it, so there's nothing I can change. So the nerves aren't really there. But then I was like, if I see it go down a bit, then it's like, oh no, did I make a bad decision? So I didn't really like that. So it wasn't, and nothing is ever guaranteed. It's doesn't necessarily mean it'll be. You can have let's say a good week of nice runs, maybe one off 4. What you know what I mean? But then just solid losses after that. So it's still pretty risky. Unless you're in control. I prefer to be in control.
I find it absolutely fascinating, though, the psychology behind this is that you love to get in, your strategy is around getting it at the end of the day. Once the market is closed, you're set. Your position's locked in, and you feel better because nothing else can affect your emotions right now. The market is closed. Right. There might be some after-hour trading, and it's just absolutely fascinating to me. But the actual reason what I wanted to ask the first time before you had mentioned that even was you said, you kind of have an issue with time. Is that because are you working a full-time job?
Yeah, I have a full-time job. Okay. We have a 3-year-old. I have a 9-year-old.
So busy life. No, completely understandable. And there's nothing.
Did you get married yet? I remember
I get married in about a month, though. Thank you for asking. So yes, my time will start to eventually, be allocated differently as well. But what I wanted to ask you though is, have you ever delved into the advanced options, or even just in general looked at swing trading? Maybe off a daily chart or something. Is
I
that
did.
something that ever appealed to you, or does it just not work because you don't like the feeling of having risk on for durations of time?
No, no, not at all. I mean, it's like I bought. Actually, I even alerted it in the room, and I was looking at the chart, and it was for Gild, GILD, and I remember it was like just going close to the $100 range, and I really liked it. I said that I think this thing can go to like 111. I don't remember what I alerted, or was it in the 90s? And it was a good alert. I was proud of that alert, and then when I saw it, and I paper traded. Um, as a swing trade. So I'm always going back and forth. Do I want to swing trade? Do I day trade? Uh, like I won't swing trade a pharmaceutical company, or a penny stock. I won't even
Good.
buy a penny stock. You know what I mean? I won't even touch those. Um, I forgot the question. What was the question?
You were just talking about swing trading versus
Oh yeah, yeah,
day trading.
right. But no, I don't think I don't mind doing both. I don't know. Like I tried the options courses. I tried trading options, and I didn't have any luck on it. I just didn't like with my like when I got into CTU, full force, and it was perfect timing. My daughter was still a year old, so there was very, you sit her down and she was there. That's it. And my son, well, he was like 7 or whatever, so he's pretty good too. And my wife was home, mat leave. And then, but again, time, my wife is an accountant. She's a CPA. So tax season just finished for them. But now actually they've got year ends. So it's still pretty hectic. So by the time she gets home, I'm still doing daddy duty with the kids. No problem. That's where I'm at right now. So I'm okay with that. I'm not a selfish person. So uh, I'm there for that. So I've kind of like stepped back on my day trades. I'll maybe trade. I still will trade a couple of times, like paper trades, but I'll trade like Apple, uh, JNUG, just to continue my progress, just to see how I'm doing. I've alerted a few times in the room. Uh, it's like I'm not that good at juggling too many things. So, and it's like I have to do one thing so I don't know where long term if I'm going to go swing trading or day trading.
It
Only
it
time will
seems
tell.
Yeah, it sounds to me like I think you don't, because you mentioned it multiple times. You just want to be in control. And with
Right.
swing trading, there is that component where you're just flat out not in control because, well, the markets aren't even open. Where's it gonna, when the market does open the next day, where's the price gonna be? So from that
Right.
perspective, and I'm like, I totally relate to that. I mean, I will swing trade, but more so nowadays, if I am swing trading, it's with advanced options just because you can definitely give yourself more leeway. And I know
Right.
Ches is much better than I at all that stuff. And I think his psychology is different than mine in the sense of he doesn't mind losing the sense of control when the markets are closed and there's nothing he can do because he's got his strategies in place with the advanced option stuff. But yeah, I from what you've said, I can relate to quite a bit of. So I would say my guess would be if you were to force me into a corner, I think day trading is probably what you would feel most
Yeah.
comfortable with because of that
Absolutely.
control. How do you deal with that, Ches? In terms of mentally, how do you view the market where you're not like freaking out, pacing around the room all the time? Because you have positions on, overnight, because you are a swing trader. So, I mean, do you have, because maybe listeners are out there thinking, well, how do you really know? So let's get the other side of the coin here.
So what I found in myself personally, and I've mentioned this in many podcasts, is that directionally I may be right, but the way my brain works and my risk tolerances, I generally get stopped out, kind of like in Andre's trades before they actually work for me. So just for a little bit of context, the XPX was at about 2040 yesterday, and I'm short the 2040 puts, which is very bad because that's a lot of risk. It's right where I don't want it to be. So the thing is though, with these swing trades is I'm generally looking out, a good month and a half, and usually my trades take about half that time, which is fine for me. And I realized that actually, generally markets are in cycles. And remember, I'm trading an index for this specifically. I'm not trading a stock, because don't get me wrong, stocks can be like lumber liquidators and go straight in the hole on bad news. That'd be very bad if you weren't ready with risk management, which is always at the forefront. But I have time on my side, and just today, the SPX has rallied 30 plus points, 20 points, and I'm completely fine because once again, like I said, I have time on my side. My risk is managed. But what I want to, why I think Andre, and I always push this especially, is because for a little bit of an example. Obviously gold has been roaring. This is, we're in the middle of May of 2016 right now, if you're listening to this at a later date. And the stock NUG-T, which is just pretty much an ETF for gold, say I want it to go up. That's great. The stock is at 105. I'm selling everything below 85. So I have all of this room to be wrong. I cannot actually lose money unless gold goes below 85. That's, a 20-point buffer. And all I have to do is sit here and wait. So everybody who buys this sucker bet thinking gold is going that low, which is a huge percent drop. And don't get me wrong, it could happen. I have risk management in place. But that's why I like advanced options, and that's why I'm completely comfortable swing trading them, is because I literally have so much. I can be wrong. This stock, the gold could go down a ton. And
gold could go down to $86, and you'd be okay.
It could go down to $86. And think about it. I put on my position at 105. It could go down to $86, and I still collect all the money that I did for selling the spread that I did.
And it's still a winning trade for you.
And it's still a winning trade. So pretty much what I kind of find out is, after I kind of went through the course, is that I could be completely wrong and still make money. And for me, that's like the best feeling in the world. I was like, great, this can't get any better for me. And if anything, it helps me sharpen up, maybe my directional prowess, and seeing that, even if it does get close to testing that 85 mark, be like, maybe I need to relook at my entry. Maybe that was a bad point to get in. But guess what? I still made money. The account still grew, and it just made me look a little bit harder at my entries. But, like you said, I have a whole set of criteria for it. But that's why I'm completely comfortable with it. And, like you said, swing trading, you have that unknown of things can gap very much against you. With advanced options, actually, I can set my max loss immediately upon putting my position. Say gold gaps down to $20. Magically, something crazy happens. I already have a max loss set. I have it set as soon as I put the trade on. So that's why I feel comfortable with it. Anything could happen. I could go fly on an airplane. Like when I do go to pit, I'll have positions on. And if the world is about to end and the market completely dies, my max loss is set and my account's completely intact. So that's how I personally feel better about it. And that's how I'm able to I have no problem holding positions for, multiple days or weeks.
Boom shakalaka. There we go.
Yeah.
So
you got in, there's a lot of like the options courses. I jumped on them right away. I went through the whole thing. I didn't get to the advanced options. I went back to, trading stocks. I couldn't understand a few things, so I just left it on the back burner. Yeah, again, it sounds fantastic. Like, I was excited. I'm listening to you talk about advanced options, and I want to go into the advanced options. Say, okay, I got to understand it even more. What's Chess talking about? I really got to understand this more.
Yeah, I mean, you've already paid for the course, so it's sitting there waiting for you. I mean, so it's just time. That's the only expense for you right now.
I have it.
So
I have.
Go ahead.
Oh, that's it. No, I was just, yeah, definitely. I mean, all these, that's the beauty of it. The stock market isn't going anywhere.
Yeah.
And hopefully neither am I, knock on wood. So I got plenty of time, we have the kids, the house life, whatever. And then when everything, comes back, settles a little bit more again, back down to earth, and I can jump back in it again.
Well, you summed it up perfectly. The markets aren't going anywhere. No. And if they are going somewhere, that implies that the whole world has melted down, and that's okay. We're all going to be hunting rabbits in our backyards trying to feed ourselves. So you got the right mindset for sure. So looking at the time, we're going to have to start to wrap things up. But what, as you are right now, in your trading journey, what are some, things that you think you're doing very well, and then, some strengths, and then what are some things that you want to start to you want to work on them. You want to get a little bit better at them.
Okay. I'm definitely, my entry is, I'll say my entry is good, but it's not the best. I've tried to, I usually just jump in. I see it. I like the setup. I look at the price. Can I get in and out? Like, how do I Like, can I get in right here, and where do I put my stop? If it's realistic, then I just jump in and then put my stop. I won't jump in, at the top, and then let's say if I use way, I won't put I'll use my risk reward ratio, see if it's good. But I usually just jump in. Hopefully within time it'll be a well planned out, trade. Like, this is where I'm going to get in, this is where I'm going to get out, this is where I'm going to get stopped out if I have to, and then okay, next. That's one of my strengths, which I'd like to get better at, my entry. What was the other question? There was a few.
Well, I think you kind of you answered it all. You told us what you're good at. You told us some strengths, and then you told us what's something you want to get better at. So Ches has got a question though about losses, which you kind of segued beautifully into this. So
this is perfect. So obviously at first you were kind of, when you'd bail from stocks, that was an emotional feeling. How would you compare kind of what it feels like now to take a loss versus back then? How different is it?
Well, number one, it's not, the loss is nothing really. I do put my stops a little bit tight. That's maybe one of my weaknesses. Maybe it's a little too tight, but it's really definitely gotten a lot better. I handle it a lot better right now. I was trading Apple, 50 shares. Lot sizes are definitely a key. Thank you, Clay, because I did that. I started doing that in like September, October last year. There's nothing wrong with buying 50 shares of Apple. You know what I mean? So I'd buy 50 shares of Apple. I put my stop loss. I even changed my fee structure to a per share, where I used to have $5 a trade, which was crazy. It would kill me. I would jump in and out. Oh, it's going to go up. It's going to go down. Oh, it's going to go up. Oh, it's going up. Chase it. Oh, it's going down now. You know what I mean? 20 trades later, I'm out like $100 in commissions. Anyway, I changed that whole fee structure. A penny a share, 50 shares, Apple. It moves percentage wise, which is great. That means if I put, $5,000, whatever it is, I'm buying 50 shares. So when I do lose, I'll lose maybe $8 plus $1 in commission. So like $9. I'm gonna take the loss. I'll go get a cup of coffee, come back upstairs, see what's going on, do a little bit of my day job work, then jump in again. So it's a huge difference. Would be in the past, a $5 stock, 1,000 shares, 10 cents down. I'm already in the hole, $100. Oh my God. Or like jumping in on something, it's, a $6 stock. Again, same scenario. 3 hours later, I'm still holding, no stops, $600 in the hole, canceling doctor's appointments because I can't leave my desk.
Ooh,
I actually did that.
That sounds miserable.
You know what? I can't, I'll never make it. I'm stuck in traffic. I don't remember what excuse it was. It was just a physical or whatever. But, but a huge difference between then and now. I mean, just like 50 shares, 100 shares, something small, it all builds up confidence. It builds, you take a small loss, so it's no biggie. You don't blow up any accounts, things like that. So it's like, I'm happy. I'm happy to where I've ended up, and I know I'm going. There's more to come. I definitely have some sort of foundation under me. So not like the beginning where it was like, all right, roll the dice.
Yeah, well said. And like a lot of people, myself included, and I suppose I was probably brainwashed, and a lot of people are. It's like 50 shares. Oh, well, I watch YouTube videos and these guys are like 3,000 shares. Like, you're not really a trader unless you're trading huge size and making big gains. Yeah. Like you said, there's two sides of that coin. Now, whether or not those people on YouTube are showing the other side of the coin, where the losses can add up just as fast as those gains, that's a whole different story. But, if you're sitting there listening like, wait, why is this guy only doing 50? Trust me, you've probably been brainwashed by, the marketing out there and all the, hoo-ha about, big share sizes and big gains and all that. And, you got to trade huge size and just, you got to start small, like you said. And you said, I'm happy. Yeah. Because you're happy, because if you're wrong, it's not like you're wrong in this, sense of $1,700, like some of your other past ones where you were wrong. All your risk is definitely controlled. So I don't know if you're aware of this. I think Ches can get it up to Canada. I think we got it up to Hooch, but he owns
it's a little bit expensive for shipping, but we could do it. Go ahead.
Okay. But Ches owns a time machine. So if somehow we can get it through customs and up to you in Canada, and you could go back to the start, what would be a bit of advice that you'd give yourself?
Oh yeah. I thought of that. It was so many, so much. But I mean, if trades wise, I mean, learn something before you jump in. Paper trade for a good year. Don't, patience. Don't jump in. Don't run at it. It'll come to you. It's just like everything happens, in due time. I've said it many times. Look, come on, I'm due. So that's the patient. I mean, I would go back and I'd say, take your time, no worries. Don't get riled up, and certainly don't buy penny stocks. And maybe hunt. I think try to find you a little sooner.
I think you summed it up perfectly earlier when you made the comment the markets aren't going anywhere. I think if you went back to the beginning and said, hey, look, the markets aren't going anywhere, that pretty much says everything. That, have patience, let the markets come to you, and just, take your time. So,
definitely.
I think that would be a good bit of advice.
Because if the markets aren't there tomorrow, we're all going to be out hunting rabbits in the backyard. So we'll all be in the same boat then either way. So we can, we'll be bartering, and that's how we'll do our charting then. But anyways, the only question that really matters to Clay, and we'll determine if we even air this podcast, is what is your favorite movie?
I definitely wanted to say Dumb and Dumber, but I won't. But it is a great movie. Cracked me up from start to finish. I just saw the movie recently.
Did you? You just saw it for the first time? I'm jealous.
No. I had seen it before.
Okay.
I had seen it many times in the past, but it was.
You needed a refresher.
Yeah. I mean, I think it cracked me up. But no, if I were to say, look, I like kidding around. I like joking around. I love comedies. I have a pretty decent sense of humor. But I love dramas. So my all-time favorite is a toss-up. I definitely would have to say My Left Foot, Daniel Day-Lewis. If you've never seen it, watch it. Tell me you've never seen it.
Nope. I'm adding mental note right now to add it to the list.
I was hoping you hadn't seen it. It's a fantastic. I watched this movie after Daniel Day-Lewis won the Oscar for Best Actor award back then. I forget when it was. In the 90s? Was it the 80s? I don't remember. It's a true story. Christy Brown. The guy, he's playing a handicapped person. Okay, in Scotland, I think it was, or Ireland. So I think Ireland. And I'm watching the clip. The Academy Awards, whatever. And they show you the clip, and first I go, wow. I wonder how they got this guy to act. Like thinking he was literally handicapped like that. This guy gets up. I couldn't believe it. It was like I had to do a double take. Come on, it's the same guy. And I saw the movie. I was floored. It was a fantastic movie. That type of movie, Cinderella Man, fantastic. A Beautiful Mind, fantastic. So I pretty much go for that type of movie, And in comedies, I had a few down. Oh, Mad World. If you've never seen that, that's a great classic movie from the 60s.
So you got to slow down, because now my wife and we have about 15 movies we got to catch up on. So, but My Left Foot, I reached down and I grabbed some paper, and I will definitely, add that one to the must-watch list. What about food-wise? What do you up in Canada? What's your favorite meal? And what do you guys eat for dessert up there? Don't you know?
I pull everything. That's my problem. I used to smoke 8 years ago, and then when my son was born, I quit, and then so it's like I enjoy everything now. Pizza, Greek food, gyros, real gyro, not the minced meat one. Real gyro, like on a spit. It's fantastic.
I thought those were called gyros.
Gyros, yeah, gyros.
Typical American guy right there. Let me get a nice gyro.
Right.
No.
Yeah, I don't know how I've watched some videos like on I just recently got into motorcycles, so I just bought a motorcycle, and then and I was watching a lot of YouTube videos, and these guys are in LA and the San Bernardino and whatever, and they're cruising around, and then they went to have gyro at a Greek restaurant, and the guy puts the plate down, and it's all like slices of minced meat. I go, what the heck is that? That's not gyro, whatever. But if you guys are ever up in Montreal area or near here, I'll take you guys to eat real Greek food.
What about desserts?
Cheesecakes. I'm not too big on desserts. I like potato chips. Funny story is I was we're at Walmart. I'm walking by the chip aisle with my wife, and I stop and I tell my wife, "Do you realize I'm literally salivating? I was salivating. I couldn't believe it. I've never had this effect of potato chips.
You're like Pavlov's dog.
Yeah. Hey, no problem with keeping it simple. So, what do you? I know you just said you get on the motorcycles, and it's funny because I actually live in the San Bernardino area, and it's awesome to go through the mountains and stuff. But what do you do for fun and hobbies? Outside of the markets.
I think I'm always working. I'm always doing something now. I'm trying to take a step back. Last year we were in Cancun for 16 days. I joined a couple of podcasts, actually the trade talks from there. This year
remember that. I remember
difficult.
that.
Yeah. I was there 16 days, and this year, I like to vacation, so we're going to go to Greece for a month. We're leaving end of July till end of August. So I might not make any of those casts there because it's 7 hours ahead.
I don't want excuses. You better be there on your vacation in Greece.
It'll be like 4 o'clock in the morning. I may be.
Hey, rise and shine.
My typing might be slurred.
Grab a gyro and you can eat one while you and put some maple syrup on it. It'll be just fine.
Yeah.
So let's see. We can't forget this one, Chaz. So I'm going to limit you to 3 words, but these 3 words have to describe a successful trader. So what would those 3 words be?
I guess patience, calm, and education. Like be calm. Definitely education is the first one, and be patient. Nothing's going anywhere. There could be so many. Don't be swayed. I mean, don't listen to nobody. I just saw Apple just took a nosedive.
FOMC just came out for fun stuff.
Yeah.
All sorts of fireworks going on right now in the market. So, well, hey, Andre, thank you very much. Or did you have a final thought?
No. I mean, it was a pleasure. I was, to be honest with you, I was a little bit nervous at the beginning, but it's not. I probably will never listen to the podcast. I was a little bit nervous, but I mean,
okay. This is a good point because a lot of people are nervous. Was this like the dentist or getting your teeth pulled, or is this kind of just like a pretty fun? I don't know if it was
like
fun.
A conversation with 2 other traders. As simple as that. Because every time we tell you guys that it's just a phone call with us, just relax. It's okay. You're all good.
Exactly. You nailed it. I mean, it's just I've got you on my headset on my phone. I'm walking around my house, and as I'm talking. So I do this regularly. So this is nothing. It's just like we got together, chit chat. And that's all it is. I mean, there's nothing. I had written all my notes and stuff, what I wanted to say and what I want, my points and whatever. I started off with that, and I don't even know where that paper is.
Nice. So for all you out there that are listening and think, if we approach you like, hey, you want to be a guest, all this crap about, I swear it's not. That was perfect. Andre had all these notes, and he just said, "I don't even know where that piece of note went." Because all we're doing is hanging out. So So there's nothing to be nervous about. So Andre, thank you very much again for hanging out with us and telling us your story. A lot of great nuggets of wisdom. So thank you very much.
I appreciate you asking me. It was really good. Enjoyed it.
It's always good having Canadians on the show. So for you listeners out there, if you liked this collaboration between the USA and Canada, then would like to ask you to do a few things. First, if you're listening on the site, click that share button, leave us comments below. We do read those and we appreciate feedback. If you're listening on iTunes or any of the other podcast players, be sure to subscribe. And if you have a few extra moments, leave us a rating. Things like that really do go a long way, preferably a 5-star rating if you think that's what's we're worth. But little clicks of the mouse, little clicks on your phone really do go a long way and let Ches and I know that, hey, people are finding this stuff worthwhile. So thank you again to Andre, and we will see everybody back for the next episode.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.